In a video on January 6, 2022, the famous YouTube crypto influencer Bitboy Crypto acknowledged Cardano's efforts and said, "Cardano is taking their time. Their attention to detail may pay off in the long run. How do you feel about Cardano's strategy?" No doubt this spurred on a great deal of attention for the cryptocurrency. It is worth noting that Bitboy Crypto's claim is starting to pay off. One of the largest scandals in the cryptocurrency sphere is the failure of the crypto trading platform FTX and the subsequent arrest of its founder, Sam Bankman-Fried. The scandal created a strong ripple effect across the industry and turned away a lot of potential investors from crypto assets. It's not surprising that most crypto investors decide to stay clear of cryptocurrencies in the quest for greener and safer pastures. Right now, the number of people leaving and selling off crypto investments have been on the increase. 52% of the 254 investors interviewed in the study Catching the Eye of Investors, carried out by business lending firm Clarify Capital, plan to steer clear from investing in cryptocurrencies in 2023, according to the report shared with Finbold recently. However, a combined 71% of the surveyed investors stated that they were likely to invest in either technology, 41% of them, or artificial intelligence investments, which is 30%. The latter is presumably thanks to the recent rise in interest around OpenAI text-based AI platform ChatGPT and generative AI. Also, the study has shown that investors are more likely to swarm towards businesses that have high profitability, a high potential return on investment, and strong leadership. At the same time, they consider it a major red flag if a pitch seems too good to be true. And in most cases, this is in fact true. Meanwhile, cryptocurrencies have been recording constant growth since the beginning of the year, recently adding $50 billion to the crypto market capitalization in a single day, while fiat currencies have all been dropping in value. At the same time, the crypto market has been demonstrating strength against the top 5 major indexes in the first quarter of 2023, while Bitcoin's purchasing power has outpaced that of the US dollar amid historically high profitability for a bearish period in financial markets and failures of multiple banking giants. From the looks of things, the previous year has been a challenging one for the crypto industry. But the recent surge in prices, which have been steadily budding, all thanks to the renewed optimism since the year's turn, could make some investors reweigh their options and probably reassess their decisions to stay away from crypto investments. Despite the outrageous decline in its value, Cardano might be more bullish than it appears at a first glance. A closer look at the on-chain data reveals a surprising trend. The majority of orders on the market are buys rather than sells. This could potentially be a signal of an upcoming reversal shortly, as investors seem to be betting on ADA's long-term prospects. Recent data shows that buyers are stepping in, accumulating ADA at the current price levels. This buying pressure may be fueled by the belief that the digital asset is undervalued and positioned for significant upward movement in the coming weeks or months. It is also worth noting that this trend is emerging amid a broader market downturn, which further emphasizes the underlying strength of Cardano's fundamentals. One factor contributing to the bullish sentiment around Cardano is the project's steady progress in terms of development and adoption. The growing interest in Cardano's DeFi and NFT platforms, coupled with the ongoing work of scaling solutions like Hydra, further boost the digital asset's long-term potential. Another aspect that may be attracting investors to Cardano is its focus on sustainability and energy efficiency. With growing concerns about the environmental impact of cryptocurrency mining, ADA's proof-of-stake consensus mechanism offers a more eco-friendly alternative to energy-intensive proof-of-work cryptocurrencies like Bitcoin. And regardless of the current bearish trend in the market, Cardano's strong fundamentals and the bullish on-chain data could catalyze a potential price reversal. Investors should keep a close eye on the market dynamics and watch for signs of a trend reversal, such as increased trading volume or a break above key resistance levels. Also, founder of crypto venture capital Dan Garmendello took to Twitter to share his followers that he's been building on Bitcoin and accumulating on Cardano. "It's the ultimate crypto place," he added. "Lately, I've been building on #Bitcoin and accumulating on #Cardano. It's the ultimate crypto power play," he tweeted on May 10th. In another tweet, the entrepreneur and YouTube crypto blogger extended support for Bitcoin ordinals, stating that Bitcoin maxis are trying to cancel them and Web3 as well, and this poses a disgrace to innovation overall. He didn't specify what exactly he had been building on the blockchain of the leading digital currency, but acknowledged that it was not yet Bitcoin ordinals. Garmendello often tweets about Bitcoin and ADA in particular, clearly showing support for these two leading cryptocurrencies. He has also recently admitted to holding meme cryptocurrencies, but did not specify which meme coins he holds exactly, and if there are popular ones such as Dogecoin or Shiba Inu among them. He just tweeted that just because he does not speak about them in tweets or post videos about them on his YouTube channel, does not mean that he does not hold them. The problem with Cardano ADA is that there are plenty of reasons to push it to the backseat. Even the attractive words laced on the lips of optimistic investors and analysts don't offer much help. We are caught in the middle of a painful past and an uncertain future, and it's no wonder why everyone is staying away from crypto, especially Cardano ADA. Nonetheless, there are a few perks in the Cardano ecosystem that could amazingly skyrocket the price of its native token. Yes, we are talking bullish again, but it's important. Something cool happened in the Cardano ecosystem recently. Launched on the Cardano mainnet on the 31st of January, the network's native over-collateralized stablecoin JED is set to expand to multiple blockchain networks. In a blog post published by Cardano, the developers behind JED, said, while the stablecoin will remain unchanged when it's implemented on other blockchains, it will exist as a wrapped token on these networks. The developers include that a centralized bridging solution is necessary to provide a safe platform and decide to partner with Chainport. According to Cardano, JED will likely be integrated into Binance Smart Chain and Ethereum first, with other blockchains to be added at a later date. JED announced its multi-chain expansion plans 2 weeks after the over-collateralized stablecoin launched on Meta C1, an EVM-compatible sidechain of the Cardano network. Since its launch, JED has amassed a total of 36 million ADA tokens locked in its over-collateralized reserve. Plus, according to data from DeFi Llama, the coin's total value locked was $15.08 million. Furthermore, despite the monetary depegging of leading stablecoins USDC, USDT, and DAI when Silicon Valley Bank unexpectedly collapsed in March, JED maintained its peg. Another key area to pay close attention to is decentralized finance. At the beginning of 2023, one of the key priorities for Cardano was the development of its presence in the DeFi space, an area where it has historically trudged behind blockchains such as Ethereum. So far, it looks like Cardano is finally delivering on this strategy. New decentralized exchanges are emerging, a new stablecoin project just launched, and new DeFi innovations continue to spring up with astonishing regularity. All of that increased DeFi activity is starting to reflect in the numbers. Total value locked, which is a metric that investors use to track how much activity is taking place on a blockchain, is soaring. TVL for Cardano is now at a 10-month high, and there's finally room for optimism that Cardano can start to climb the TVL charts, where it's currently ranked 18th among all blockchains. If Cardano were to break into the top 10, it would be a clear signal that Cardano has finally arrived as a player within the DeFi space. You want to hear something else? Crypto whales are swarming over Cardano in numbers. They're buying Cardano hand over fist. How do we know? As a result of the transparency of blockchain technology, it is possible to decipher which blockchain wallets are actively buying or selling Cardano. Right now, the whales are turning up. Generally, whale activity can be a very useful leading signal. By way of comparison to the equity markets, it's similar to a large, well-known value investor snapping up shares of a particular stock that appears to be undervalued. It's something that keeps you on your toes. The only problem is that in the crypto world, we don't usually know the exact identity of who's holding these blockchain wallets. Since Cardano is finally making a big push into DeFi, which is one of the most important sectors of the blockchain world, and is continually upgrading and improving its blockchain, there are solid reasons to stay expectant. Of course, this might not sound cool, but buy the dip. As long as you can take a long-term perspective and don't expect a rocket ship to the moon within hours or days, then there will be no unnecessary heartbreaks. Cardano's success will be a steady one. Steady, but uncertain. But that's going to do it for today's video. Make sure you click on the subscribe and notification buttons, and we'll see you in the next video.